Okay, good morning and warm welcome for all you folks over here at Almus Market Mornings. Now, it was quite an eventful day yesterday, or rather, I should say, a historic day, as we saw a military action from Russia, who mounted an assault by land, sea, and air in the biggest attack on a European state since World War II. Now, perhaps the war itself may not be prolonged and widespread as in World War. The market volatility and resultant implications have been huge. Russia has followed its aggressive stance and with actual action, which said the markets were not prepared. Mostly, despite warnings from some of the world leaders. Now, most risk assets fell into New York's midday and safe havens rally, but we did see quite a bit of reversal of these moves, as some of the investors perceived that the peak of geopolitical tensions might have been seen, but don't expect a full recovery as early as more sanctions are planned, and the combined impact of economic sanctions will be long lasting for many economies apart from Russia, even though we see Russia has been well prepared for these things. Rupees rate move lower by almost 1.5% from previous close was mostly due to markets being ill prepared and badly positioned for such turn of events. It needed strong selling from PSU banks to halt dollars rally beyond 75.30 during the day, but level did break in the closing hours to swiftly take the rates towards 75.70. Slight recovery in global sentiments overnight, which is the general attitude of buy rumor and sell fact, can be seen can see rupee recover some of its losses. In medium term, combined impact of higher oil prices sustaining and the global monetary tightening trend will keep the rupee under stress, with only flow related reliefs seen intermittently and smoothing operations from RBI. Now, if we have to talk about our central bank, a bold central bank, RBI released its MPC minutes yesterday. The minutes highlighted that all the members kept repo rates unchanged at 4%. The primary reason for the same being the possibility of CPI inflation remaining below the upper target range of 6%. According to one of the RBI's Deputy Governor, Mr. Patra, the current uptick is supply driven and there should not be linked with the global inflation. Central bank has also vowed to be agile, and they will take actions on monetary policy only on the facts. There is also one more update on the fundamental side. There is this today there is Indian GSEC market will have the auction of 10-year securities after last 2 week of auction cancellation. A cutoff higher than 6.76% will result into more bearishness in the market, but it is likely possible that there may be lesser action from the market participants in such a scenario and possibility of devolvement in involving. So this was the fundamental update from your host, Mr. Shikhar Garg. Now, as we promised, we'll move on to the technical updates from our colleague, Mr. Nikunj Bharakhda. He'll be updating you on what the market look like when it comes to technical aspects. Nikunj, over to you.
Yeah, thanks, Shikhar. So, as far as technical analysis is concerned, it is also known as the graphical representation of whatever is happening in the market. So, if I were to say what is that one thing which will summarize the long historical data in one picture, it will eventually come to graphs, and digging more into it, graphs are always known as technical analysis tools in financial markets. So looking at your screen, I'll just present the dollar rupee chart, which is on the monthly time frame. So we have been seeing that dollar rupee has been in an elongated bull trend. That means INR has always been depreciated against dollar. So if we were to see the current points from where dollar rupee has reversed, it was somewhere around 72.30, 72.90, and now it holds around 73.85, 74 levels. And as far as the resistances are concerned, we have seen that 75.70 is the level from where dollar rupee has been reversed on the lower side. That means there was a chance of rupee appreciation from those levels. Yesterday's move was just because of the fight between Ukraine and Russia, followed by the oil prices, and thirdly, the rollover. So if we were to see the volume in futures, that is in exchange, we made a record level crossing $5 billion yesterday. So the volume crossed $5 billion in exchange. Definitely it was because of the combination of all these three events. But yeah, that will earmark this day as a record volume day. Now, so broadly speaking, I feel 75.70 will act as a first resistance. And if at all it breaks that, then the next level of resistance will be 76.30. And on the lower side, if at all we see 73.80, I think that would be a very good area for importers to hedge. Now, moving on to another chart, that is of euro dollar. Yeah, we have seen euro dollar has been moving in a standard deviation channel of 0.5 and 1. So in general, on daily and weekly chart, 0.5 standard deviation channel has always been a trend on the downside, followed by 1 standard deviation. I think anywhere near 1 standard deviation is a level wherein you can look to go long or short. As of now, on the higher side, we have seen 1450 as a very good level to go short. And on the lower side, we feel 1.1050 and 1.09. So 1.09 and 1.1450, these are the two levels which we are watching out for to enter into the position. Now, another commodity, the precious commodity, which is gold. Right now, it is somewhere trading around 1914. And yesterday's move, which was just a panic move because of the fight between Russia and Ukraine, has led gold move towards 1970 levels. And right now it has dipped to 1915 levels. So looking only at technicals, we feel that if at all gold closes below 1910 today, then possibly we may move in the narrower band of which it was in which it was trading earlier at 1780 and 1920. So these are the two levels which will look out for. On the higher side, if it is closing above 1940 and whether it is closing below 1910. This will indicate whether the gold bull run will continue or it will again dip down and consolidate in a narrower fashion. So that's it from my side. Thanks, Shikhar.
Okay, wonderful. Now we know what levels to act on from the technical point of view. Do follow us more on fundamental updates as well. And following today's commentary, we are also going to release another commentary on the situation of Ukraine and Russia. What's our take about it? So make sure you listen to that one as well. Till then, I bid adieu. Thank you so much. That's it for today.